Welcome to our deep dive into the liquid asset that is redefining global markets. While gold and oil have historically dominated the discourse of wealth, a new blue gold is emerging as the most critical resource for the 21st century. For professionals and investors, water is no longer just a commodity, it is a strategic necessity. As global populations rise and climate patterns shift, the gap between supply and demand is widening. This creates a unique intersection where ethical necessity meets financial opportunity. Today, we will explore the market trends, infrastructure demands, and technological innovations that are turning water into a top-tier asset class for the modern portfolio.
To understand the investment thesis, we must look at the data. Despite our planet being covered in water, only about 0.5% is accessible fresh water. This limited supply is under immense pressure. Analysts predict a 40% shortfall in global water supply by 2030 if current consumption patterns continue. This scarcity isn't just a humanitarian issue, it's a massive market driver. The global water market is now valued at approximately $1 trillion, encompassing everything from treatment to distribution. For entrepreneurs, this scarcity represents a mandate for innovation in efficiency and conservation technologies.
Much of the world's water infrastructure is aging and inefficient. In the United States alone, billions of gallons of treated water are lost daily due to leaky, century-old pipes. The annual investment need to modernize this infrastructure is estimated at $1 trillion globally. This creates a massive tailwind for companies specializing in smart piping, leak detection sensors, and large-scale utility management. Investors are increasingly looking at smart water solutions, where IoT and data analytics meet traditional civil engineering to drive efficiency and capture long-term contracts with municipalities. As traditional sources dwindle, we are turning to the oceans. Desalination technology has advanced significantly, with over 20,000 plants operating worldwide. The sector is seeing a 9% annual growth rate as costs fall and energy efficiency improves. Key players are focusing on reverse osmosis and modular desalination units that can be deployed in water-stressed coastal regions. For the tech-savvy investor, the breakthroughs in membrane science and energy recovery devices are the primary areas to watch, as they directly impact the bottom-line cost of producing potable water from brine. The most sustainable source of water is the water we have already used. Currently, a staggering 80% of global wastewater is discharged into the environment untreated. This is a massive inefficiency that the market is beginning to correct through circular economy models. Companies that can treat and recycle industrial and municipal wastewater are seeing increased demand. From a corporate strategy perspective, zero liquid discharge is becoming a goal for manufacturing and mining firms to mitigate regulatory risks and ensure operational continuity in arid regions. For conservative investors seeking stable returns, regulated water utilities offer a classic defensive play. These companies operate as regulated monopolies, providing a service that is indispensable regardless of economic conditions. Historically, these stocks offer low volatility and consistent 3 to 4% dividend yields. As interest rates fluctuate, the reliable cash flows of water utilities remain attractive to those looking for a hedge against market volatility. Furthermore, many of these utilities are now integrating digital management systems to further optimize their operational margins and capital expenditure.
Agriculture is the largest consumer of fresh water, accounting for 70% of global usage. This makes the sector a prime target for efficiency-driven disruption. Precision irrigation, automated moisture sensors, and drought-resistant crop technologies are no longer optional. They are essential for food security. Investors are eyeing companies that can provide 20% efficiency gains in water use without sacrificing crop yields. This ag tech boom is driving a merger between biotechnology and water management, creating high growth opportunities for venture capital and private equity.
Environmental, social, and governance, or ESG criteria, have moved from the periphery to the core of corporate strategy. Companies are now required to disclose their water footprints and assess water risk in their supply chains. A business located in a water-stressed region faces significant operational risks that can impact credit ratings and stock valuations. Corporate water stewardship is now a metric used by institutional investors to judge management quality. Firms that proactively manage their water risk are proving to be more resilient and are often rewarded with a lower cost of capital. How can an investor gain exposure to this sector? There are several pathways. Water-focused ETFs, such as PHO and CGW, provide broad exposure to a basket of companies involved in water equipment, treatment, and utilities. For those seeking higher risk-reward, pure play stocks in specialized purification or smart tech offer direct upside. The key is to balance stable utilities with high-growth technology providers. As the sector matures, we are seeing more thematic funds that specifically target the water scarcity thesis, allowing for a targeted approach to this essential market. In conclusion, water is the ultimate long-term play. It is a sector where the fundamentals of supply and demand are indisputable. Whether you are an entrepreneur looking for the next big disruption in purification, or an investor seeking a defensive hedge with an ESG edge, water offers a unique and compelling narrative. The liquid future is one where efficiency is the primary currency. By aligning capital with water security, we don't just generate financial returns, we invest in the literal foundation of the global economy. Thank you for joining us for this strategic overview of the water market.